can expect Thea Reid Hastings to face some serious questions about what's driving that disappointing subscriber growth and lower than expected subscriber guidance for next quarter, especially after Hastings said in his letter to shareholders that he anticipates more competition from the combined AT&T Warner Media Company and Fox and its new parent company, whether that's Disney or Comcast. Now, Victor Anthony from Aegis Capital telling us that this is a material miss on both company guidance and our expectations, which should challenge the extremely positive sentiment on the stock. Anthony saying that we continue to remain on the sidelines. Wedbush's Michael Pachter saying, quote, the stock is down because domestic additions fuel the cash flow losses. Everyone accepts that international is in investment mode, and their guide is wimpy as well. He says, I think that investors should also be concerned by the ballooning balance sheet for content. But GBH analyst Daniel Ives saying that the subscriber miss was a, quote, disappointment, but does not move the needle on our bull core thesis that international subscribers will march down the path to hitting between 90 million and 100 million subscribers by 2020. Ives saying that he would be buyers of Netflix on this weakness. We'll have to see if the stock bounces back on all of these comments or whether there's more of a reaction to what Hastings has to say. That video call starts at the top of the hour. Guys, back over to you.
All right, Julia, thank you. Julie Borson. Now to one of the most followed Netflix watchers, BTIG's Rich Greenfield. He joins us now on the Fast Line. Rich, great to speak with you.
Thanks for having me, Melissa.
Explain to me this whole forecasting, this model that Netflix used that missed by 1 million subscribers. The magnitude of the miss seems to tell me that whatever they're using is terribly not reliable.
Well, I think one of the main things to keep in mind is that Netflix has been historically pretty terrible at forecasting its subscriber growth. They've had big misses. They've had big beats or outperformance relative to expectations. I actually would, if you actually think of all your viewers, if they go back over time and you look at what's actually happened, the last 2 times Netflix has missed a quarter in terms of subscriber growth, the next couple of quarters they've substantially outperformed. And so they may be just setting a low bar for next quarter that kind of gives them room to outperform after the disappointing number this quarter. But I'd also keep in mind that, the U.S. number, what people are saying, they're probably on track to do roughly 5-ish million subscribers. That's been our number for a while for this year. 5 million subscribers on a base of 55 million is just unprecedented. Remember, HBO kind of topped out a little north of 30. So the fact that Netflix is still growing at roughly 10% in the U.S. is a pretty astounding number. International has always been hard to forecast. It's going to be lumpy. But they're still very early in Asian markets like India. But those markets have tremendous potential over the next few years. So I think in no way is this stock tapped out. It may have gotten a little ahead of itself relative to this quarter, but I think the long-term growth potential is completely unchanged.
Hey, Rich, it's Tim Seymour. So I agree the execution's been unbelievable. But talk to us about the valuation and when is enough and how much of this is priced in, all that usual stuff. But that's really the issue here, isn't it?
I mean, look, this stock had exploded past our $330 price target over the course of the last month. I mean, this stock has been a monster in terms of growth as people have piled into it. I think as you look at growth potential, though, you look at how early they are in India, where they probably have 1 million or less subscribers. I would suspect that the TAM, the total addressable market in India, is probably 50 to 100 million subscribers at least. Remember, the U.S. is at in the 50s. And so, they have a market that is as large, if not substantially larger in India than the U.S., and they're just getting started in India. So as you think about where this stock can be in a few years, as they start to execute in markets like India, as Japan starts to kick in, you've seen it already kick in Latin America. You've seen it start to kick in France and Germany and continental Europe. Asia is the next frontier. We have not seen, I want to be very clear, we have not seen Asia kick in yet to the numbers. As you start to scale in Asia, and they're just starting to do original programming. Sacred Games was their first big Indian original launch last week. I mean, they are very, very early in India. I would, go back that, Netflix has had some big negative swings when they've missed before, and it's created some unbelievable long-term buying opportunities in the stock in the past.
Rich, always great to get your analysis. Appreciate it. Rich Greenfield of BTIG. Yeah, call gets underway, or the webcast gets underway in just under 5 minutes' time. What do we do here? The stock is still down about 14% in the after hours.
I agree with everything you just said. The question is now, will people not cut them? I think the market's given them a pass on a lot of things. I think now they'll be under the microscope, and they're in the penalty box now until next quarter's earnings. And I think The answer is probably yes. So I think at this point, that 320 level that Carter flagged, I think it's in the crosshairs for sure.
Now, we were discussing this in the commercial break, but I thought it was interesting. And you brought up Susan Rice being added to the board and a lot of the additions to the Netflix programming being sort of leaning
Very liberal.
to the left.
Yep.
Should we consider that as maybe a pressure in terms of
Look, Guy brings up a very good
number?
point, but I don't think that would have an impact just on the quarter. I mean, they talked very clearly, or they mentioned very clearly, that this had to do with some sort of internal way of forecasting their sub numbers. So I would suggest that it probably didn't have an impact, and I wouldn't trade the stock based on that alone.
What a slippery slope for them to have to try to, figure out what is the right programming exactly for the for the base that we have. That's a difficult endeavor. I don't think we'll hear from them whether that happened or not.
I just think we price this company like it has no competition, and that's the biggest issue here, and their valuation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.